Today, we dive deep into a topic that has shaken financial markets time and time again: the impact of corporate scandals on stock prices. In this video, we'll explore the dramatic effect corporate scandals have on stock prices and how they can send shockwaves through the entire market. Transition. Visual representation of corporate scandals in headlines. Narrator, voiceover. Before we proceed, if you haven't already, hit that subscribe button and click the bell icon to stay updated on our insightful investment content. Scene, stock exchange footage. Narrator, voiceover. Corporate scandals have long been the Achilles heel of financial markets. These controversies, whether it's accounting fraud, data breaches, or unethical behavior by company executives, can have a severe impact on stock prices, investor sentiment, and the overall stability of the market. Scene, historical footage of notorious corporate scandals. Narrator, voiceover. Take Enron, for example. Once a Wall Street darling, its fraudulent accounting practices led to a massive collapse, wiping out billions of dollars in shareholder value. Similarly, scandals like the Volkswagen emissions cheating scandal and the Wells Fargo fake accounts debacle created waves of panic and distrust among investors. Transition. Visual representation of plummeting stock price graphs. Narrator, voiceover. The immediate aftermath of a corporate scandal is often met with a sharp decline in stock prices. Panic selling ensues as investors fear the worst for their investments. Scene, experts interviews. Expert 1. When a corporate scandal is exposed, it erodes investor confidence in the company's management and raises questions about the overall integrity of the organization. Expert 2. Market sentiment takes a massive hit, and investors rush to exit their positions, causing a snowball effect on stock prices. Transition. Visual representation of investor sentiment graphs. Narrator, voiceover. The impact goes beyond just the company involved in the scandal. It can send shockwaves across the entire industry and even influence the broader market sentiment. Scene, news footage of government investigations. Narrator, voiceover. As regulatory authorities step in to investigate, legal penalties and fines add to the woes of the company and its shareholders. Scene, long-term stock price charts of scandal-hit companies. Narrator, voiceover. For some companies, recovering from a major scandal can be a long and arduous journey. Share prices may take years to rebound, and some may never regain their former glory. Transition. Visual representation of scandal mitigation strategies. Narrator, voiceover. However, not all hope is lost. Many companies have managed to survive and even thrive after a scandal by implementing robust corporate governance measures and transparency initiatives. Scene, interviews with corporate governance experts. Expert 3. A strong emphasis on corporate governance and ethical practices can help rebuild trust with investors and stakeholders. Expert 4. Companies that address the issues head-on, make amends, and strengthen their internal controls can regain investor confidence. Scene, success stories of scandal recovery. Narrator, voiceover. We'll also highlight success stories of companies that navigated the storm successfully, offering valuable lessons to investors and businesses alike. Transition. Visual representation of steps to protect investments. Narrator, voiceover. So, as an investor, what steps can you take to protect your investments from the impact of corporate scandals? Scene, practical tips for investors. Tip 1. Diversify your portfolio to spread risk across different industries and companies. Tip 2. Stay informed and conduct thorough research before investing in any company. Tip 3. Pay attention to red flags, such as rapid executive turnover or unexplained financial inconsistencies.